The market for cryptocurrencies is very volatile, which makes it a possible risky investment. Because of this, traders and investors are coming up with more and more tools and indicators to track market trends and help them make the right trading decisions. The Bitcoin Dominance Index is one of these tools. The Bitcoin Dominance Index helps to look at different market conditions to figure out which of Bitcoin and other cryptocurrencies has the stronger market trend. In this video, we'll talk about Bitcoin dominance and what makes it change. What is the dominance of Bitcoin? Bitcoin dominance, or BTC dominance, is a way to measure how much of the total value of all cryptocurrencies is made up of Bitcoin. Its main idea is that the value of altcoins will go down if BTC becomes more popular. On the other hand, altcoins will become more valuable if BTC becomes less popular. BTC dominance is also known as the Bitcoin Dominance Index and the Bitcoin Dominance Ratio. The level of Bitcoin dominance is determined by comparing the total market capitalization of Bitcoin to the total market capitalization of all other cryptocurrencies combined. The term crypto market capitalization refers to the total market value of cryptocurrencies. The market capitalization of a cryptocurrency is determined by multiplying the total number of coins in circulation by their current price. So, how does BTC's strength relate to other cryptocurrencies? What affects BTC dominance? 1. Altcoins usage increase. Bitcoin was created to replace fiat currencies and be a common currency for transferring value. On the other hand, many altcoins go beyond being an exchange system as they are also used in major projects, including gaming, security, art, and many more DeFi services. As a result, Bitcoin's market dominance decreases as altcoins become more widely adopted. 2. Stablecoin use increase. We all know that the cryptocurrency market is volatile. To deal with this, many people have started looking into stablecoins, a type of altcoin. A stablecoin is a cryptocurrency whose value is pegged to another asset class to remain stable, like fiat currency, gold, etc. With stablecoins, crypto investors don't always have to convert their money to fiat currencies to lock in their profit. Instead, they can convert it to stablecoins. Moving your funds from the volatile Bitcoin to stablecoins reduces BTC dominance. 3. New cryptocurrencies launch. Many more coins are being introduced into the market, attracting more users and investors. Some of these coins attract investors and developers in a short time. In their bid to gain market relevance, the project team carry out activities to make the altcoin more valuable. Some altcoins get hyped up on social media, making investors jump into the price pump for the possibility of making quick money. These activities also reduce Bitcoin's dominance. There are many ways to make money faster with altcoins than with Bitcoin. Bitcoin's price is already high, and compared to other cryptocurrencies, it is more stable. Many people are investing in altcoins to profit from more volatile and dramatic market moves. That's all for today. I hope you liked the video. Don't forget to subscribe to the channel. See you next time.